Hello, 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 hello. Welcome to October. You're hearing interest rates going through the roof, 7+%. Homes by home builders not selling. Homes in general down. Pricing going down. You're hearing it everywhere in the news. What is going on in this market? I'm here to help explain this to you and tell you actually why it's a good time to buy, why it might not be a good time to buy, and really just go over all your options to sell your home. Hi, this is Jonathan Campbell with the Don Winter Team EXP. And the number one question we get right now still is it still crazy out there? And I'm here to help you because we're experts at giving you advice on housing. You're seeing it all over the news. This is what you're seeing. Mortgage rates continue to rise for the sixth consecutive week in a row. Beginning of the year, these rates have literally been about 3.22%, have doubled as of today. This is literally from today's market or interest rate. On average, 7.15%. And you're seeing it all over the news. You're seeing news saying interest rates higher than since 2008, biggest price drops in history. What is going on in this market? I'm here to clarify that and what is going on. But guess what? Yeah, interest rates are high. But to go back to this chart, interest rates are a little bit higher right now because of what the Fed is doing. The Fed is raising interest rates, or the Fed is raising interest rates. And yes, the housing market is following. And it's working. It's working. Inflation is starting to calm down a little bit. But at the same time, what it's doing is it's slowing people from wanting to buy a home. It's showing that, hey, their monthly payment is going to be higher. Now, I'm here to tell you also that historically, because you've been following the show for a while, you've been seeing all the market updates before, I've gone over all the historical data before. I've shown you guys that historically we're still pretty darn good. You can talk to your parents' or even your parents that might have bought a house in the 80s, in the 90s, even the 70s. Double-digit interest rates, 13, 14, 18%. I mean, all over the place. And guess what? They're okay. Some of them might still live in that same exact house that they bought in the 70s or 80s. But one thing that they can tell you is that they have a tremendous amount of equity. They've been sitting on a lot of cash. They have it. They might have used it to pay for kids' colleges. They might have used it to pay for a new car. They might have used it for whatever it may be. But they've been using their equity in their home that they've been buying over and over and over. And I'm here, and I'll get into that it's okay to buy a house right now. Life happens. You might have gotten a new job and you want to get on that. You might need to upsize because your family's growing. You might need to downsize because your family is lessening and the kids have moved out. Whatever it may be, life happens still, and you need to buy and sell houses. And that's why we're here to give you the clarity that you need. It is okay still to buy a house. It is okay that you might have to pay a little bit more on your monthly payment. There'll be a time that you might be able to refinance that, do different things like that. But it's okay. We've seen worse that is out there before. Now, we're in the state of Pennsylvania here. I want to show you kind of what is happening with the showings that I show you every single month. 2020, as you saw here, there's a decline. There's a decline in showings right now, but you can see here it's not off pace. So what I mean by that is it's not like we're seeing a big dive. It's not like when we saw in 2020 when COVID outbreak happened and they shut down real estate transactions and things not happening in the real estate world. You can see here big dip. So you saw that. You can see here slight decline, and there's a slight decline. Same exact kind of metrics that we're looking at, but it's just magnified. It means that more showings are not happening, and typically it's due because of the interest rates. Housing affordability is a little bit lower, meaning that, yes, when your milk and eggs and your groceries that you are buying are 2 to 3 times what they normally are, yes, it's going to affect how much you can spend on purchasing a house. Your monthly payment has gone up because of those interest rates, and it's holding some buyers back from actually looking at homes. And I get that, and it's okay. But I'm talking to the people that need to buy and sell a home right now. It might be okay to wait, and if you can, great. But other people, they got to move right away. But showings are down right now. So if you've listed your house on the market wondering why activity has been a little bit slower, it's because showings naturally are down right now. And historically, over the last couple of years, down even further than what they were. But I'm here talking to you about why equity is the shining star in the housing market right now. So interest rates are all over the place. They're continuing to rise. Mortgage payments are just getting higher because of that. But what a lot of people don't realize is when you might start to struggle with maybe a payment here and there because the grocery bills have gotten so high, cost of living is just through the roof, equity is still the shining star in this housing market. The equity that you're sitting on, meaning that the cash that your house is still worth versus your mortgage payment, is still very, very high. I just want to show you a chart here of the country of what has happened year over year and what has happened from this time last year. On average, you can see here, right here, on average, homes have gone up about $60,000 in equity. Places like Florida, California, over $100,000. Hawaii, if you're in Hawaii, over $100,000 in equity. Pennsylvania, my home state, $29,000 in equity. On average, again, $60,000. Well, if you're contemplating buying a home versus what you're renting right now, I can guarantee you're renting right now. You did not make $60,000 from paying rent. It doesn't happen. Now, owning a home, it can happen. Your equity can go up. And most of the time it has over the course of this year. So again, $60,000 on average that the equity in a home nationally has gone up. That will make you think, yeah, I might have to pay a little bit more per month. Historically, we're still good. Equity gone up. Guess what? You're sitting on a tremendous amount of equity still. So if you're looking to sell a home, you're going to have equity in your home. Even though prices might be coming down in your local neighborhood, you have to talk to your local expert. Whoever sent this video to you, talk to them about it or what that looks like. But at the same time, you're probably still sitting on a good amount of equity. So what is going to happen? What is all of the forecasts happening in 2023? What are the experts saying? Now, keep in mind, every market is different. That's what an MSA is, that your market area is going to be different depending on where you are at. So again, talk to your local expert of exactly what your house in your neighborhood, in your city is going to do. But on national average, I'm going to show you guys what's happening here. On average, the biggest consensus is home prices are going to rise about 1 to 3% in appreciation. And if you're like, Jonathan, that's not a lot of appreciation. That house went over $60,000 year over year. Yeah, that's correct. But again, if you're renting, you don't have any appreciation. Your rent's actually going to probably go up, and you're going to be paying even more money to stay in that house. And I'm not bashing renting. There's definitely a place and time for renting. A lot of people should rent if they're transferring a job and they don't know if they're going to stay in the area. Yeah, get to know the area, rent there for a little bit, whatever it may be. There's definitely positives to renting. But at the same time, if you're looking to own a home, you're looking to build an asset. It's one of the number one ways that people build wealth in America is by actually owning their home. Yes, appreciation is still going to happen on average. Most of the experts are saying that. On average, you see here, a lot of them are saying anywhere between 3 to 5%, 1 to 3%, or less than 1%. So in reality, it's saying about anywhere between 1 and 5% of appreciation is going to happen in 2023. The other side of it is some people are saying negative depreciation of 1 to 3%, meaning that prices are going to come down about 1 to 3%. Over the course of the year. So whatever boat you're in, the thing with all of that is that when you rent, you're not going to have any appreciation or depreciation. When you own a home, it's always looking up. And I can tell you from experience, people that bought in the 80s and 90s had double-digit interest rates. They're not looking back at their home purchase. A lot of them are still sitting on that equity that they've worked with, have used for different life situations that they've gone through. Again, kids, colleges, college payments, all sorts of stuff they've used with that home equity. So big thing. Now let's get into Lehigh Valley, our local market here. Percent of list received 101.3% of the list price. That means if you listed your house at $100,000, on average you get $100,000, $1,300 on average to your price. So you're like, well, Jonathan, I see this big spike down. It means that prices are coming down. No, it just means that the market has actually started to correct itself, meaning that, yes, you don't have those huge explosions of paying 20, 30% over market value. hundreds of offers, it's not dozens of offers on a home, tons of activity on a house. It means that the buyer actually has some buying power right now. They can actually negotiate home inspections. They can actually negotiate the price. They can actually do stuff like that. And if you've been following us for a while, you've heard me say this analogy a lot, but it's like you're going on the highway at 90 miles an hour. There's a cop on the side of the road. You slam on your brakes and you're going 50, 55 miles an hour. And guess what? You're still moving. Well, this is showing me that, yeah, you might be going 25, 35 miles an hour, but guess what? You are still moving, just at a slower pace. But the crazy thing is, this actually is right around what we were last year, on average, about a little over 100% asking price to list price. Average sales price, $337,000 from 2020 21 last year, 9.6% increase. From August of this past month, down. It is down. So prices are starting to come back down from the August and the summers of 350 and above. But at the same time, again, it's like you're deaccelerating. Things are still moving great. Things are still at an all-time high. Things are still very, very high. They're just starting to slow down here. So again, you still have tremendous amounts of equity in your house, especially if you bought in anywhere in this time from 2005 literally to this time this year. Your house has appreciated in value, especially here in the Lehigh Valley. Days on market, 17 days on average home sales. I don't look at this as much, but you can see here, still things are flying off the market. Days on market is starting to rise, but they're not anywhere near that 2011, 2012 number. And the reason for that is because of simple supply and demand. The demand is still there because the supply, as we'll get into here, is still very, very low. So when you are a home buyer and you need to and want to buy a home, what's going to end up happening is you still don't have a lot to choose from. Inventory is still super, super low. On average, about 790 homes are on the market in the Lehigh Valley. It's actually down from what the summer's numbers were in the 800s, meaning that not as many people are putting their house on the market, not as many homes are available. And that's why prices have been pretty steady. Home demand is still there. Days on market still very, very low historically, and yet it's because of the supply and demand. We didn't have over 5,000 homes on the market. There's less than 1,000 homes on the market, which means there's still tremendous, tremendous demands. So to wrap this up, how is the market in general? It's complicated. And you need that expert behind you to explain, hey, is it the right time to rent? Is it the right time to buy? Is it the right time to sell my home? Well, I'm here to tell you, it depends. It depends on what your goals are, what you're looking to do, and what you need to happen in today's market. But I want to give you some tips and leave you with this. 3 things buyers can do today to really help them navigate this low inventory. Expand your search area. I know that sounds pretty basic, but there sometimes are certain areas where you might want to be in a certain school district and you didn't know a certain community was in that school district. Well, your local expert will be able to tell you exactly where you can help search that to fit your needs. Sometimes you might be having a criteria where you want a property that has 1 acre or more. But you know what? That 3/4 of an acre, based on I want a large backyard, but you want an acre or more, but that house is actually in the front of the lot and you have a much larger backyard, perspective can play a big role in that from showing that it has a large yard. So you might have to actually bring back down your search criteria with the acreage that you might be looking for. Same thing with layouts of houses. Sometimes a 2,000 square foot home and a 2,500 square foot home, depending on the layout of the home and how open it is, that 2,000 square foot home might look actually larger than that 2,500 square foot home. So again, perspective, expand your search area and your criteria, talk to your expert. They'll be able to walk you through all of that. Explore alternative financing options. Guess what, guys? 20% financing is not the normal. 5%, 3.5% down, 0% down. Those items are out there. Talk to the local mortgage expert. They'll be able to walk you through all of that, of what that looks like. Look for grants, gift funds. And again, wrap it up. I keep saying this, but you have to talk to an expert. They know how to help you. Us here at the Don Winter team can help you out in all of that. Strategy matters in this market more than ever. And last thing, get a $5,000 bonus when Don Winter Team buys your home. What does that mean? Sometimes there's people out there that they just don't want to show their home. They have a house that might have came up from an estate sale. They need a quick solution because they need to be out of their house before the end of the year. Well, as you saw in this market, as prices are all over the place or coming down a little bit, interest rates are all up. And what happens is you're not guaranteed that this home is going to close by the end of the year. Well, we can guarantee you that. We can get you a cash offer on your home, give you all the options to sell your home. We're going to show you what it's going to sell for on the open market, what it's going to sell for if you fix anything up, what it's going to sell for if you sell it as is, and we will give you a cash offer on your home. And the beautiful thing about this, between now and January 15th, we're going to give you a $5,000 bonus on top of any offer that we give you on your home. It's going to help you with any of your holiday spends, puts a little bit more cash in your pocket during this tumultuous and crazy time of inflation, and it helps you out. But again, it's just an option. So go to dw-team.com, get access to our $5,000 bonus with the Don Lehrer team. Google Don Lehrer team. You'll find the website and enter it. Give us your address. Let us help you understand what it takes to be in this market and all the craziness that it has to offer. So that's October. Hope everybody has a great Halloween. Enjoy the festivities at the end of the month. And I'll catch you on the next market update in November. See you guys.